Okay, everybody, we're going to get back into some practice trading, and I'm testing a new strategy, and I kind of want to do it in an objective way. And so what this is going to be is we're testing volume spread analysis, and we're combining that with RSI divergences. And so far, I've tested a lot of this. This is all the totals added together, but most importantly in my back testing, I like to actually plot a graph. And if you can't see that, yeah, it's a pretty good graph. So that's what we're going to do. And I think I'm onto something. I've got a strategy I've been doing, but this is shorter term. I'm doing it on the 15-minute candles. And yeah, I think it's kind of exciting. So as we go through it, this is where I left off for my testing. As we go through it, I'll explain how it works. So we're just going through it one candle at a time. You have to be pretty meticulous. I did not mean to do that at all. So what we'd be looking at, this is an example, actually a perfect example of what I'm looking for with VSA, volume spread analysis. We're looking for a long green that has a shorter green volume compared to the red, which has larger volume. And the red has to be shorter. And preferably we are looking for candles where if they have a top wick, it's longer than the bottom. But I'm not 100% sure on that rule yet. So this is, and we're pairing that with divergences. This is RSI. Let me make sure that, yeah. So RSI here, we're looking for a situation where this peak is different than this peak. And right now they're not. If, as this line shows you, if this line goes down, whereas this line goes up, that is an indication to short. And the opposite is true. If you get a green line like this, which it doesn't print the lines initially, but if you get something that looks like a greater than sign, that means up. A less than sign means down. So you can see here, this divergence did result in a big downward move. Also, if this fit, which it doesn't, we'd be looking for a 2-to-1 ratio. And where we'd set the stop loss is the tip of this. So we'd be looking for a 2% downward move. And that could still happen, but, you know, there's no divergence, so it doesn't fit the strategy. Yeah, we need to go through this one candle at a time. This doesn't really happen that much, but considering these are 15-minute candles, okay, here we go. This peak is lower than that peak. And yeah, so that would be a less than sign. Also, it just bounced off this 200 moving average, which is the only indicator on the chart there. So another rule is if we get one green candle in this situation where we're going to short, we get out. So there we have a red candle, but it did retrace. So we're just going to let this play. We're going for a 2-to-1 ratio. Now there may be times where it gets close and I'll cut the losses or cut the wins. This went to 7.5. I think I'm going to let it go one more. So we're looking for twice this, which is 0.8. We got to 0.79. Yeah, I think we're just going to sell there. Wait a second. Oh, I measured it wrong. Yeah, we'll go for 0.6. So on the spreadsheet here, the way I record this column represents short or long. 100 is long, 0 is short. This was a short, so we're going to do 0. And the gain is 0.6. I don't do the decimal places because it saves time. Worth it here means, was it profitable? I'm just looking for a shorter way. So on this strategy, we're up 79%. And this is over a month or two, or a few months. Yep, and see, this is why we got out. We got this hammer candle. It was pretty close. You got to know when you're taking it. Also, this confirmed that that is a divergence. But you can see the lines only print afterwards, which is kind of weird. But for our purposes, that indicator still works. Now here's an interesting scenario where we do have a divergence. This is a bullish divergence, meaning, actually no, it's pretty much the same. I was looking at that wrong. Alright, so the first step is always we're looking for volume discrepancies. Yeah, funnily enough, maybe it's because it bounced against the 200 moving average, but that would have been a pretty good short. Okay, we do have a volume discrepancy here. You can see small green, large red, small red, large green. But this is not a divergence on the RSI, so we're not taking it. Again, that would have worked out, but you got to stick to your rules. Yeah, that would have been a big one. I think it's the bouncing up against the 200 moving average. You get a big retracement here. Yeah, not really a divergence. Alright. Make sure we're still recording. Yep. Now this is interesting. Well, yeah, that's still, that peak, it looks like there's significant distance, but we want something that's higher on one and lower on the other. Now see, this wouldn't be this isn't VSA, but this is higher than that. By the way, that was a bearish sign, what I just pointed out. So, kind of explains why we're getting what we're getting here. No divergence, no VSA. This is VSA. We've got a bearish divergence here. If you look where this red candle, if you're going for a long from your direction, this, you look at the red candles because those are the downward peaks. You can see these downward peaks, that red candle is lower, but on the, down here on the RSI, that's higher. So we're going to make this our stop loss. The VSA works. With this downward trend, this could really be wrong, but that's the strategy. Ooh. See, we're supposed to get out after one red candle, but that's a hammer candle. I think we will get out there, but let's see what it did. Ooh, would have been pretty good. See, that's a questionable rule. I'm not 100% sure. Yeah, that would have been a massive trade. But we got to test the rules as we got them. So that's a 0.02 loss. That was going to be a long, so 100. Yeah. I don't know. Sometimes being safer is not such a bad thing. Alright, we got a VSA here, sort of, but the longer wick at the top is disqualifier under our current rules. Alright, this is matches VSA, but I don't really see any divergences here. So, that's a no. Would have been a real good trade though. Oh, okay. So, we have a divergence here. This would be a bullish divergence. Or no, this would be a bearish divergence. But I don't think we really got a VSA here. Maybe that hammer candle would have been the time to get in, but it doesn't really match the rules. This is a volume discrepancy, but not the kind we're looking for. Yeah, see, it pointed out that there was a bearish divergence there. Alright. Alright, let's see if we get anything out of this. Nope. Huh. Technically, there's a divergence here, but it's bullish. Kind of makes sense. It's breaking through. And then it didn't break through. Alright. This is 2022. Some big action happening. Yeah, nothing so far. There is a divergence here. That hammer candle. Yeah. It's all about what you can actually reproduce, though. You don't find patterns in just one spot on the charts. This is a divergence. Pretty substantial divergence right here, bullish divergence. There kind of is a real big difference here in the volumes, but with that wick, yep, I'm not taking it. Nope. Smaller candle, larger volume. We got the same thing here. Be interesting if it went long, but it didn't. Alright. Not really a divergence there. Now this is interesting because the green body is technically larger, but it's not more than twice as large. There's a divergence here. I would probably take this, but there isn't. It is worth noting that these are a lot closer than these are. There's a big difference between these in those, but it doesn't really fit the criteria that I'm trying for. But that would have been a pretty good trade. Zoom in a little bit. Here's a VSA. Candle wick is pointing the right direction, opposite direction of where it's supposed to go. But we don't see a divergence anywhere. That's a pretty big VSA. But same thing. No divergence. Also, a theory I'm working on is maybe it's worth it to take VSA trades if they're if they're in the upper regions of RSI ranges versus lower. Maybe statistically they're more likely to reverse. See, that was a huge volume discrepancy, but we're up against the 200 moving average. See, normally, if it's green, we're expecting a short. Yeah, there's nothing here. I meant to say if it's green, we're expecting a long, but because of the wick, you can expect the other direction. Nothing yet. These did not have a divergence. See, that still matches even though that's small node VSA there. That is a VSA. These candles are interesting. I only take them if the bottom is longer. The bottom wick is longer than the top, and it is. But we have a divergence. Not really. This is slightly lower. So that's a no. Which is a good idea in this case. There's a VSA divergence, or a VSA mismatch, but I'm not seeing any real, like, if anything, this would be very bullish, but the VSA setup is for a short. Yeah, I kind of wouldn't be surprised it would bounce at that level. Yep. Depending on where you put your take profit, if you took that, that would be pretty big. Okay, here's a divergence. This is, as crazy as this is, it's a VSA. Yep, and you've got, oh wait, this is a bullish divergence. It would need to be the other way if it was bearish. So we're not taking that. Yep. Yeah, I just wonder how many points this is. If you did take that. Really not that big. Although that's pretty big on 15-minute charts. See, this could be like, if this had been solid down there, that would have been like a 3-line strike. Yeah. Okay, that fits VSA. Doesn't fit the divergence. Nope. Would have been a good trade if you took it though. See, the magic of the strategy is the VSA aspect of it by itself is enough to build a strategy off of. But when you start adding divergences to it, it's even better. That's why this equity looks like this. It's almost just a straight up line. But it doesn't happen that much, which is kind of what you're seeing in this video. Okay, that fits VSA, but that's not a divergence. That's a divergence, but it doesn't have VSA. I bet it'll go down a bunch though. Yep. It's really when you get both of these things together, you got like a real good strategy. Okay, that was VSA, but there's no divergence here. Now this is VSA, and I think we might have a divergence. So that's kind of like the last peak. It's a bearish divergence, though. Yeah, not a bullish divergence. Still went up a bunch anyway. That's VSA. Let's see here. Okay, that's that bottom, and that's that bottom. See, this is a bearish divergence, because that's going that way where that's going that way. So that doesn't fit. Turned out to be a good trade anyway. That's VSA, but no divergence. I mean, technically there's a divergence here, but again, that's a bullish divergence, or a bearish divergence. That doesn't really fit. Nope. That's really significant. But nothing on the chart there. Alright, this could be... No, there's really no divergence going on here. VSA there, but the wick's in the wrong direction. that kind of works. Is that, see, this says bullish. Up, sort of down. So that's not what we're looking for. See, it did end up signaling a bullish movement. You can think of this as the VSA part. You can think of this as the divergence part. That's pretty big thing in volume. I bet it'll go down, but it doesn't fit the pattern. It's kind of a rounded top. Yep. I think we're just going to get flat for a while. Did I miss anything here? Nope. Bullish divergence. Or sorry, bearish divergence. I think the right one in my head, I just say the wrong one. This is VSA here, but the divergence we have is bearish. So no. Okay, what do we have? What was this? That isn't a divergence at all. This is a little bit of a three-line strike thing going on. I wouldn't be surprised if this goes down a bunch. But it doesn't fit our strategy. Okay, this did. Maybe. There's nothing there, really. Nope. It's saying there was a bullish divergence here, but that's pretty much normal. Bearish divergence. This matched VSA, but there's nothing unusual with the RSI there. VSA, no real divergence. Worked out pretty nice anyway. Here was a bullish divergence. Yep, you did get a bounce from that. Yeah, there's a divergence pretty long term here, but the VSA thing just does not apply. Actually, oh, that's bullish divergence anyway. Nope, looks pretty normal to me. Pretty normal. Okay. This is a slight bullish divergence. So we're going to say I took it right there and lost 0.05. No difference there. Technically there was a difference there, but there was no VSA. Alright, this could be something. We've got bottoms there and there. That's pretty much, if anything, this is lower. Yup. So we're going long, that's the stop loss. Good so far. I'm going to make the buy-in price the stop loss. Actually, let's see how much this is. How much are we really talking about? 52? Yep. We're going for 104. And that stopped it out. So that is a break-even trade. So, yeah. It got pretty close. Maybe if I'd actually traded this, I would have put the stop loss up halfway or something, but to get conservative estimates, we're just going to say that that was a halfway thing. Or that we only broke even. This is bearish, so we're not taking that. Alright, do we have any divergence here? If anything, we've got, that's pretty much, yep, everything's normal there. Everything looks normal. Saying there was a bearish divergence there, but I didn't see it. Alright, got some VSA there. That is slightly lower, and that is slightly lower, so there's nothing special going on there. Nothing special going on there. Nothing special going on there. This is a pretty big difference, but no divergence. Okay, here we go. This is the kind of thing we wait for. Clear bullish divergence. Yep. We're going to put the stop loss right beneath there. I think we did it. 42, so 84. Alright. See, this is why patience is important. That took forever. But like, we lost tiny amounts and made pretty large amounts. So I'm just gonna stop it here. 310.22. See, that's 5 days, and we went from, we made like 1.5% basically, and with leverage, that's fairly substantial to make in just 5 days, and that was a slow round. Look at how much all these other ones have done. So we're at an all-time high on the equity curve, so that's a little bit of a slow round of practice. It's normally you get a lot more trades than that, but it works. So that's a cool strategy. Alright, thanks guys.